So here we have the MACD indicator. As we all know, it is one of the most famous and oldest indicators ever created and is widely used among beginners. However, what if I told you that there's actually a newer version of this indicator that is proven to be almost 3 times more profitable than the older version? And so without further ado, let's dive right in. I'm going to show you what the indicator is and how it works. So first, I'm sure all of us are familiar with the mechanics of the classic MACD. It helps us identify potential trends by displaying crossovers between two lines. If the blue line crosses above the orange line, it shows us that the market is potentially uptrending and that it would be a good buying opportunity. And if the blue line crosses below the orange line, it shows us that the market is potentially downtrending and that it would be a good selling opportunity. Now, this may seem like a good and simple strategy. However, a common problem with this strategy is that it only works on trending markets. And as we all know, markets aren't always trending. It can also move sideways or within a range like this. And because of that, the MACD indicator would perform terribly during this type of market. Like in this example here. We can see that the MACD is crossing upwards, which supposedly tells us that an uptrend is coming. However, because the market structure is moving sideways, it gave us a false signal and the market did not go up as expected. Now, over time, these false signals could accumulate and slowly wipe out your profits and could even bring your account towards the negative. And so, what if I told you that this new version of the MACD indicator could also help us identify trends? However, it could also eliminate these false signals for us when the market is ranging, therefore minimizing your loss. And so that indicator is called the Impulse MACD. Similar to the old MACD, the Impulse MACD is also a momentum indicator that could detect trends. However, it has its own unique feature. The difference is that, unlike the normal MACD which displays multiple false signals when the market is ranging, the Impulse MACD filters out these false signals and goes completely flat, as you can see here. And so, because of this unique feature, you're now less likely to get trapped by these false signals. And now, I'm going to show you exactly how to apply this indicator onto your chart, how it works, and the different strategies that you can use. So, the first thing you want to do is apply the indicator section, type in Impulse MACD, and choose the one by Lazy Bear. Next, once you've applied the Impulse MACD, we want to change the appearance of the indicator so that it's simpler to look at. And to do that, you go to Settings, Style, and follow this exact preset that I created. And as you can see, the Impulse MACD now looks much more organized. Now, let's take a look at each part of this indicator. So, similar to the normal MACD, this indicator also has 4 components. First, we have this blue line, called the Impulse MACD line. Next, we have this orange line called the signal line. Furthermore, we have the histogram. And finally, we have the middle line. Now, how do we use this indicator? So, very similar to the normal MACD, the way we identify trends on the market is by looking at the crossover between the Impulse MACD line and the signal line. If the Impulse MACD line crosses above the signal line, it indicates that the momentum is going upwards. And if the Impulse MACD line crosses below the signal line, it indicates that the momentum is going downwards. However, if the two lines go flat like this, it indicates that the market is ranging or moving sideways, and you should avoid taking any positions. Now, let's move on to the different strategies that you can use with this indicator. So this next strategy is a little bit more advanced, but it also has a higher win rate. It's called the Impulse MACD extension, and this is how you trade it. The first step is we need to manually add overbought and oversold levels on the indicator. And so what you do is, you drag your mouse above the middle line of the indicator and press Alt-H. Or, you can just add the lines manually like this. And so this will be your overbought line. For your oversold line, you do the exact same thing, but in the opposite value. So this time, drag your mouse to below the middle line, and again, press Alt-H. Now you have your oversold line. So, the reason we apply these overbought and oversold levels to the indicator is because we want to make sure that we only take positions from crossovers that happen outside of these overbought or oversold levels, because this means that the price is overextended. and prices that are overextended will have a higher chance of making significant moves. Now, you may be wondering, how did I determine the exact placement of these lines? So here's how you do it. First, let's start with identifying the placement of our overbought line. So first, you want to zoom out. Now immediately, we can see that there are two types of crossovers that's happening. First are crossovers that happen further from the middle line, which are called the major crossovers. Next, we also have the smaller crossovers that are happening closer to the middle line, which are called the minor crossovers. Now, what you want to do is separate the major crossovers from the minor ones by drawing a horizontal line. And so the minor crossover should be contained below the line, and the major crossover should be contained above the line. Again, the reason for this is because we only want to take positions from these major crossovers and ignore the minor ones. And so this will be your overbought line. Now for your oversold line, you want to place it in the opposite of your overbought line. So since your overbought line is at this value, I'm going to place it at the negative of that value. And so this will be your overbought and oversold levels. Now keep in mind, these values are not fixed. You can always adjust these lines depending on the crossover placements and also the different market conditions. So if you want to use this indicator on another pair, you would need to adjust new overbought and oversold levels based on the market conditions of that pair. Now that your indicator is ready, here's how you create the strategy. So first, for your buy signal, you want to only take positions if the impulse MACD crosses over upwards, but the crossover needs to happen below the oversold line. Similarly, for your sell signal, you only take positions if the impulse MACD crosses over downwards, but the crossover needs to happen above the overbought line. Remember, crossovers that happen between the lines like this will be ignored. This is because we want to make sure that we only take positions if the price is overextended. So let's look at a couple of examples. So in this setup, we spotted a crossover upwards on the MACD while the crossover is happening below the overbought line, indicating that the price is on an upwards momentum while being oversold. And so this will be a valid buy position. Next, for your risk management, you can set a stop loss below the nearest swing low and a profit target at 1.5 times your stop loss. And as you can see, this trade ended up being profitable. Let's look at another example. Here, we spotted a crossover downwards on the impulse MACD. However, as you can see, this crossover happened inside the lines, meaning this signal will be ignored, because again, you want to make sure that the price is overextended. Next, we spotted another crossover downwards, but this time, it happened above the overbought line, meaning there's a downwards momentum while the price is overbought. And so this will be a valid sell signal. Now for your stop loss, you can set it at the nearest support level and set your profit target at 1.5 times your stop loss. And as you can see, this trade ended up being profitable. Now moving on. Another advanced strategy that you can utilize with the impulse MACD indicator is by using it to hunt breakouts. So first, let's start with the definition. A breakout is when price makes a sudden and significant move towards one direction. And if you could take advantage of these significant moves, it could result in a massive profit with minimal risk. And so, a common pattern that tends to happen is that breakouts tend to form after a long period of ranging or sideways market. And by using the impulse MACD's ability to identify these ranging markets, we can use it to our advantage and find breakouts before they happen. So here's how you create the strategy. The first step is finding a range market, and we can do that by waiting for the impulse MACD to go flat, as shown here. However, you also need to take into consideration the length of the flatness. Remember, we only want to use signals where the impulse MACD goes flat for a long period of time. We do this to ensure that we don't get a false signal, because the longer the market stays within a range, the higher the chance that a breakout would happen. Now, once you've identified the ranging market, the next step is predicting the direction of the breakout. Will it happen to the upside or the downside? And so the way you do this is by looking for signs of rising momentum as shown by the histogram, which are the bars that you can see on the middle. So let's look at an example of that. Here, we can see that the histogram is currently flat. and after that, it slowly starts rising towards the upside, as reflected by the price also going upwards, indicating that the overall momentum is bullish. Which means, based on this example, we can conclude that the breakout will likely happen towards the upside. And so this is a good opportunity to take a buy position. Next, you also need to make sure that your risk management is on point. Now, because this is a breakout strategy, it means that it can have a high profit potential while maintaining low risk. Which is why for your stop loss, you can set it just slightly below your entry position right here. And as for your profit target, you can set it slightly higher. A typical breakout strategy usually has around a 3-to-1 risk ratio, and so you can set it at 3 times the length of your stop loss. And as you can see, this trade ended up being profitable. And so I just revealed to you multiple impulse MACD trading strategies that you can easily implement and trade right now. And all I ask for in return is for you to give 2 seconds of your time into liking this video and subscribe to this